Okay, so hello and welcome back again to our first time buyer series at FiveStar Mortgages. We are joined again by Marta, the founder, Tracy, senior mortgage broker, and Petra for our first visit as a senior mortgage broker, who can tell us quite a lot about how he helped first time buyers.
Yes.
So today's episode is all about affordability and the different types of income types and what people will need to evidence their income depending on their income types. And so we're going to gradually work through a bit of an educational one. And we've got different people with different strengths.
Yes.
So we're going to start off nice and easy. Most people are employed. So basic salaries. How does it work?
Basic salary. So most of lenders would not ask for a copy of your contract. I don't know why I started with this. However, what they would want to see is 1 month payslip to evidence your basic salary. Some lenders would ask for 3 months payslip. Depends on the lender, but more and more lenders only ask for 1 month's payslips.
1 month's payslips, cool. And overtime then. So who's experienced with overtime? Who loves a bit of overtime?
Love a bit of overtime. So generally, I mean, the lenders that I've been dealing with, generally last 3 pay slips we look at. Sometimes they'll go last 6 pay slips, sometimes even up to a year if we need it, but they'll just take the average. So we'll add up the sum of the overtime on those 3 months or 6 months, divide it by 3 if it's 3 months worth. And then that average becomes our monthly overtime payment. So they'll take that into account then generally for affordability, which is great.
And I've seen Marta working at home in our home office, helping people that are paid weekly.
Weekly, yes, 13 payslips. Imagine 13 payslips. Just on top of what Tracy said, some lenders could sometimes ask for P60, can they? Just
sometimes
to see,
P60 just to confirm that it's sustainable and it's something that that you've not just suddenly done for a couple of months.
Or if you pay 2 weekly. They're going to look at your 7 payslips. So look, we could be here for hours.
3 months to 13 weeks worth of payslips, and they're just taking average.
Yeah.
So, and the P60 is just to see if you've tried to spike your overtime. Some lenders will try to avoid those types of cases, but other lenders are quite happy if you spike your overtime, and if you prove you can do it over 3 months, you can do it over the remaining mortgage term. Can't you, I suppose?
Some lenders would not even be that bothered.
Other types of entries, so shift pays and that type of thing. How does that work if someone's on a shift?
Shift allowance. I think if it's permanent, that's similar to what Tracy said. So that's your 3 months pay slips usually. Yeah. Because it's usually a set amount.
And they're just looking at the average again.
Correct. Yeah, average it over 3 months.
Yeah.
And maybe see if it's sustainable, but very rarely. It's usually 3 months pay slips, I would say.
Yeah, majority of lenders aren't they?
Same for regular bonus.
Regular bonus,
commissions, regular bonus, depending.
Loads, isn't it? It depends if it's paid monthly,
weekly,
annually, quarterly.
The bonus is very specific, isn't it, as to how often it's paid. So if it's paid monthly, but it's the same amount, that's great. We'll use the same amount. But then much like overtime and commission pay, etc., if it varies month to month or year by year, they'll come to take the average again.
And annual bonuses. So I remember being caught out of that as a broker once when it wasn't. Some lenders want 2 years and some lenders want one.
There's a couple of lenders just take the most recent.
Yeah,
that's absolutely fine. Car payments as well. I've had quite a lot of car allowance recently. Pay slips. So car allowance is something they'll take into account. If it's regular, we can evidence it over 3 pay slips. Things like that they'll take now as well.
Oh, that's a good one.
And that's usually a significant amount, isn't it?
It is, often really quite significant. Yeah, absolutely.
Good one.
What about if we see sick pay?
Some lenders don't like that, don't they?
Tell us a bit. What do you know?
So some lenders would just ask, of course, for the reason and what happened, and they would want a letter to confirm that you're back at work and everything is fine. Some lenders won't have a problem with that. It all depends how many weeks, especially if you paid weekly, how many times they see it on the payslip.
So that's the benefit of speaking to a broker like yourself then, isn't it, Petra?
Yes.
Because you know the lenders.
Yes, we all know the lender and we can find the right lender for the right person.
Yeah, that's cool.
Definitely. But I think in general, just to sum up what Petra said, they want to see you being back at work, isn't it?
But you have to be back, yeah.
Yeah.
And holidays, obviously, just basic then, yeah?
Yeah.
Yeah.
I think in essence, anything that appears on your payslip regularly, because they can all be named different things, can't they? But anything that appears regularly is something we can try and add on to just boost affordability, really.
Yeah. Good. So staying on employed then, future pay rises, job changes, what else can we think about that might be beneficial to an employed person?
Yeah, I think pay rises, definitely. Future jobs. So I've had a teacher who had a job that they were starting 3 months down the line.
Yeah.
We were able to take that because it was a raise in income, able to take that and use that for income.
So as
for
long as,
affordability.
what sort of evidence did you need to collect for that?
Contract. So we needed a signed letter.
Yeah.
I think at that point there was a signed contract as well that we had to gather and sign. So
Yeah.
long as we can evidence that it's absolutely sealed and the deal is done, it's definitely happening.
Yeah.
Whatever paperwork we've got for that. But future pay rises, if you're with a job, you've got a future pay rise, again, letter from employer.
And in my day, when I was a broker, it tended to had to be with bigger employers that are more sort of trustworthy than maybe a smaller employer that could potentially try and fudge the figures and navigate their way around. Is that still the case, or can it be any employer?
Potentially any employer, I think.
Any
I mean, I've
employer,
had
Yeah.
lots of
as
schools,
it's
for
genuine.
example. Yeah. If it's something that the lender sees as a genuine, teachers, for example, absolutely all day, every day, because they do move around schools, they do get promotions. There's every chance they're going to move, and that absolutely. But I've seen contracts for people who've worked in warehouses that are going to different jobs, and that was accepted and that was used for affordability.
Yeah.
So yeah.
Absolutely. And I think what's interesting is a lot of people think that they have to be in a specific job for like 3 months, 6 months. Actually, this is not the case. A lot of lenders would allow you to borrow, apply for a mortgage if you've been with that employer just for a month or less, basically.
That's correct, yeah.
And job changes, day one of a job change, you literally have just started a new job as well. There's lots of, the lenders are all different, aren't they? Some will say you have to be in a job for a month, some will say it can be day one, some will say it can be 3 months before.
Yeah.
So it's,
So
again, it's about knowing your lenders, isn't it? And knowing who to approach.
So if you speak to the broker, we know which lenders will let you do that. So for instance, if you don't know, and let's say you go to your bank that you're banking with, that lender might not necessarily be happy with your scenario, but you just go to somewhere else and you'll get a mortgage, no problems.
Yeah.
So I think it is important to speak to the broker and explain your scenario, explain your situation. Once we understand it, we can definitely help.
Yeah. So basically, it's going to give you that reassurance. It's going to save you a lot of time.
Absolutely.
And potential.
A lot of phone calls,
I suppose if you went to the wrong bank and they say no, and then you give up, you've kind of not bought your house, and you could have done.
Yeah.
Cool. So that's employed. Unless anyone can think of anything else about employed.
No, but I'm sure someone will call us and they
will
will have a question, isn't it?
So moving on to self-employed. So just talking about sole traders now. So an example of a sole trader might be a barber or basically a smaller business, where they're just doing their own tax return at the end, or maybe working with an accountant. What do we need? Who's going to take this one on?
So for self-employment, usually we need 2 years of accounts, and some lenders will use the latest year, some lenders will just average, and that's to be used for affordability. Of course, some lenders will ask for bank statements as well to see the income coming in, to prove that it is sustainable. Yes, and this is the case with most of the self-employment people. However, for people that are working on the construction industry, and they call CIS subcontractors, we've got few lenders that can treat them as employed because they are taxed at source, meaning that they get the taxes paid by the company they work for. And this is a really, really good criteria because we can enhance affordability. So although they are self-employed, some lenders will treat them as employed. And some people don't know about it, and they think, I'm self-employed and I might not get enough money to buy my house, which is totally untrue. So if you are a CIS contractor, give us a call. We'll find the right lender.
Find the right lender and go. So how long would somebody need to be a CIS contractor? What do they evidence?
It's usually, there is no certain time, but you have to have 2 years working in the same line of work. And you can do even same as employed from a month only, as long as you have the 2 years
track record,
yes.
And they need, so it's not, obviously they don't get issued pay slips, they get statements, is that right?
Some of them get issue pay slips. They call them CIS vouchers or invoices.
Right. Okay.
Some of them get them weekly, if they paid weekly. Some people get it monthly, and some of them get it at the end of their financial year.
Just as a summary statement.
Yes.
So you can sit down with these people, you can work out, do we present you to the lender as a CIS contract, or do we present you as a lender as a self-employed person and use their tax return?
Correct.
And just work out the best way
It
forward?
all depends what affordability we need. If we need to use the pay slips, we'll use the pay slip. If we don't, then we can use the net profit and then
find the
go
cheapest
to
lender.
find the cheapest lenders. Yes.
Yeah, great. I almost want to be a CIS contractor.
Yeah.
Sounds really easy.
You can do all the tiling, Mark. Yeah.
Lots of options.
So just to add, there is one or two lenders that will do self-employed with 1 year's accounts, though, isn't there?
There are.
Yes.
Yep. There's more of them coming in.
Oh, is there?
There's a few now, aren't there?
Yeah, a few of
Yeah,
them.
that would just take 1 year.
So it's not necessarily off the cards to buy a house, but it's just a smaller pool
Absolutely.
of lenders to go to.
Yeah, there's less lenders, but there are still a couple of high street lenders in there. So there's still lots of options.
Yeah.
Definitely.
I think it's a lot of misconception again around self-employment,
Correct,
isn't
yes.
it? A lot of self-employment, like I'll never buy a house, I'm self-employed.
Just because they're self-employed.
Yeah.
Yes.
Yeah,
But,
definitely.
Definitely seek advice from a broker.
Absolutely.
Yeah. And if you're not quite at that 1 year, I have had conversations with lenders for people who are kind of at 11 months, not quite at a year.
Yeah.
Sometimes lenders will take a judgment call. They can see roughly what they've got already, and they'll make a judgment call and say, yes, we could potentially proceed on this basis. So even if you're not at a year, if you're almost at a year,
Come and speak
still
to you guys.
yeah, absolutely, because we could still start the ball rolling.
And even if you can't
get that
get mortgage
process
now,
going.
you can tell them what they need to do.
Exactly. Yeah. How
get
much
going.
longer they need to kind of, keep working or whatever they need to do in the background.
Yeah. And that's the same sort of concept for partnerships. I mean, partnerships used to be really common 20 years ago when I was started business, but you don't seem to see them that often now, do you?
No, not really. I can't remember last time I was doing a
No, I was just
partnership.
gonna say
Probably
the
So
like
a
3 years
partnership is
ago,
just
yeah.
basically two sole traders
That's-
together,
yeah.
working together, isn't it?
Yeah.
And then splitting the business between them. I mean, I remember starting my first business as a partnership before we then evolved into being a limited company. So the same concept applies there.
Yes.
Which brings us on to limited companies then.
Yeah.
Quite a lot to talk about limited companies, isn't there?
Yeah.
Yes.
Vast
And again,
subject.
varies, doesn't it, lender to lender?
Who's going to give us a basic overview then of what do they want to see and what documents do they need?
Company accounts. So there's quite a list for limited companies. So you'll still need your tax returns as you would get
personal
normally, your
tax
personal
returns.
tax returns as you would get if you were self-employed.
Yep.
Company accounts, because that's just going to give them a trend of how well the business is doing. So
And
is the
evidence
business
that the income that you've declared on your
exactly
personal is
actually
sustainable.
affordable? Yeah, is
Yeah.
affordable, and just make sure that your profits aren't declining over the last couple. They just like to see that the business is sustainable as well itself.
Yeah.
So company accounts, your tax returns, they like to see company bank statements as well as your personal. Again, just to evidence that you've still got money coming in, you've got the money in the bank
the-
account to keep sourcing
The
your
company
income
accounts
going out.
match the sort of what they're seeing
Absolutely.
on the bank statements.
Yeah, so just kind of tallying things up, isn't it, really, to make sure everything matches.
Yeah. So what income would we use from a limited company?
It can vary.
Yeah.
Yeah.
Historically, I think it was always salary and dividends.
So
Yeah,
director
wasn't it?
salary
Correct.
Yeah.
And
and then the
And
dividends.
the
Dividends,
dividends,
yeah.
And again, it's the same as self-employed. It's either it's ideally 2 years with an average, or
But can be a year.
could be the
Potentially, yeah.
latest.
Still an
or
option.
even
yeah.
using it. So if your business is improving, you've got some lenders that work off the latest year. Then, right?
Yeah.
Yeah,
Yeah.
yeah, which is
It-
great.
And
is
then
great.
not recently, but a lot more lenders would now look at salary and share of net profit before tax or
So this
after
is
Or
tax.
after
for
tax, yeah.
this is for really successful businesses where the director's not drawing all the money out and they're leaving some of the profit in.
Absolutely.
They
So
might not need it. They don't really
Yeah,
have
yeah.
a need to draw the dividends. So
Yeah, maybe they're close to that next tax
Yeah.
bracket, so they're just
Yeah.
keeping themselves income-wise under the tax bracket, but
personal
they've got the
income,
profit.
but
Yeah,
they're
absolutely.
just leaving
but
the
got
money there,
profit
so
in the
they
business.
could have paid it to themselves
Yeah.
if they wanted
Yes,
to.
yeah.
but they don't want to. So,
So,
and
yeah.
then why should they be penalised? Isn't it? They can have
Definitely.
what they want in terms of a mortgage as long as it's affordable. without getting the money out. So yeah,
Definitely.
it's interesting that you can obviously have the lenders that would now do it before tax and after tax, and sometimes it makes a difference, doesn't it?
It can make a
So,
big difference.
What do
Yeah.
you mean by before tax and after tax? So for the profits of the business.
The net profits.
Yeah.
So profit of business might be 80,000 before tax and 60,000 after tax. Some lenders will work off the 80,000.
They will.
Yeah, yeah. So if affordability is tight, it's worth a
it
look
can
at those
make a
lenders, isn't
difference.
it? It can bump you up to where you need to be.
Yeah, cool. That sort of summarises limited companies quite nicely there. Anyone else got anything to add?
No.
I think that's pretty much limited companies, isn't it?
So other incomes then, other types of incomes that you can get outside of your employment. So, well, second jobs, which is still a kind of an employment. What sometimes people used to come with me and they'd have a second job. How do lenders view second jobs?
Yeah, we can use income from second job as long as it's sustainable and it's been going on for, long enough.
Yeah.
And this depends on each lender. Some of them would want 6 months, some of them would want a year record. It's all about plausibility.
So if you've got a normal day job and then maybe you do a little bar job and you're getting your pay slips from your bar job
Correct,
and it's
yes.
all going into your bank.
Yeah, we can use both of
Yeah.
them, or you
Yeah.
have a weekend job and your Monday to Friday job.
Yeah.
That's
Nurses and care workers are a good one. They often have their 9 to 5 job
Yeah.
or whatever their hours are, but then they'll do.
Do they just do 9 to 5?
90, yeah, whatever their hours are. I wanted to adapt that. They have their regular main job.
Yeah.
And then quite often they'll do bank work, or they'll do
yeah.
a bit of
Supply
care work
work.
in the evenings
Yeah.
or weekends or something. So all of that can be taken into account quite
Do you
often
know,
as
it's
well.
so many scenarios, or when someone's like, I had a nanny that had 2 part-time jobs, and then the crucial thing was to find a lender that would take 100% of both jobs,
yeah.
isn't it? So it's kind of so many scenarios.
Yeah.
I actually
like-
had someone with 3 jobs as well in the past, and we found a lender that would take 100% of
wow.
all the jobs. As Petra said, was that plausible? Was that sustainable? Yes, it was. And
how's
the
it
lender
been?
was
Is it an established pattern?
Yeah, and actually, interestingly, also 0 hours contracts is one that they will sometimes consider, some lenders. If you've got that history of having done that for some time and having had hours regularly, that's something else that nowadays, because a lot of people think 0 hours contract won't be included.
Yeah, we
But
missed that on the employment
if you've got
tabs.
the history and the sustainability.
So let's jump back to that then. So 0 hour contract or agency workers, who's can tell us a bit more about that? And
with agency workers is a little bit more like the CIS side of, you need to have your history. Usually they ask you for 2 years. Some lender will want 1 year. Some lender will go for the latest 3 months pay slips. Some of them will ask for the 12 months. It all depends
on the lender.
And
So you
which
have
one
to
you need.
have been with an agency for at least 12 months.
Not necessarily with one agency. You can switch. It can be different agency as long as you've got continuous work.
Yeah.
They'll be happy. There are lenders there that will be happy to take your income.
Because you've evidenced over a period of time that you're able
Yes.
to go and get other work, albeit that it's all short term.
This is very common, for example, with the HGV drivers.
Oh, yeah.
They keep working through agency and they change agency depending on which one is paying better and so on. So,
Yeah. Nice.
Yeah, fixed term contracts.
Yeah, I was just
That's
about
another
to
one,
say,
isn't it?
basically.
So just led it to me, fixed term contracts.
Fixed term
So I've
contract.
had-
So
I've had clients
who's
with
that?
fixed term client.
Who's
fixed term
what
contracts.
type of careers are in fixed term contracts?
Well, the one that I had actually was a musical conductor in the West End.
Oh, wow.
So a very random job.
Yeah.
Lots of fixed term contracts, but obviously musicals are very limited in time potentially on how long they're doing them.
Yeah.
But again, if you've got that history there, so the lender that I went to needed just 2 years worth of history showing that they'd had the contracts for a couple of years. They'll sometimes ask for a minimum time left on the contract, but it can be as little as kind of 2 or 3 months in some cases.
Yeah.
So they just need to see that it's something, again, that's regular, sustainable and can keep going. But yeah, that's something else I've had a couple of,
Similar with IT contractors, isn't it? That's very popular. So
Yeah.
they own the contracts as well, and they often change contracts. So switching from one firm to another, one contract to another. So again, this is not a no, isn't it? You just have to know
It's
which
just a
lender to go
They
to.
use the day rate. Is that right? How does that
So
work?
basically they'll calculate your day rate times, let's say, I don't know, 5 times 40 6 weeks.
46 or
Yeah,
48.
Depends on the lender, and that would give
The
you a
lender
figure.
assumes that they're going to take some holiday then.
Absolutely, they do.
Unbelievable.
Yes, they do. Everyone's allowed holiday, Mark. So, interesting one. I had an apprenticeship. I had a girl who was, she was an apprentice for engineering company.
Yeah.
So, again, that was the lender that was happy to lend it to her based on her apprenticeship income. So, you know what? There's so many types of income that can be used these days. So.
Yeah.
There are, yeah.
So the main thing is, if you go to your bank and they say no, come and speak to a broker.
Give us a call.
But you should have come to a broker in the first place.
Yeah. But if you've made that mistake,
be filled up with positivity.
Absolutely.
Absolutely. So other incomes, jumping back, we got drawn back into those employment types. Maintenance. What happens if you've got somebody that's got children and they're getting paid maintenance from their ex-partner? How does that income get factored in?
So it used to always be majority of lenders were kind of had to be court ordered, although that's changing. There are some that don't need it to be court ordered anymore. Evidence wise, generally just need to see a couple of bank statements to show it's going in your bank
3
regularly.
months, roughly,
So just so they can
Usually.
see that income is still coming in. Some lenders it will depend on the age of the child as to whether they'll accept as well. Because obviously if the child's 17 and it stops at 18, it's not sustainable.
Yeah.
But I have had lenders where the child has been a little bit older, but we've been able to evidence that actually, once the child reaches a certain age, the parent's going to go and do a full-time job instead, or that there's lots of things that can adapt to keep that income higher. So,
okay. And so staying on the theme of children, child benefit, tax credits, universal credits. What
Yeah,
are we looking for?
we can use most of them. Child benefit in the same way like the maintenance needs to be in a bank statement. There are lenders that are particular about the age of the children, but there are lenders that don't really care how old is the child. It could be 16 as long as you get it.
As long as
we
there's
can use
some
it.
sort of rationale about how you're going to afford the mortgage after.
Exactly, yeah. You always have to think when that child benefit stops. If the mortgage is affordable, then you're all very well to use it. Same with universal credit, I would say, or with child tax credit, depending on the area you are nowadays is changing and it's all included. So we can use that with universal credit. We just have to be careful because we can't use the housing element. Because once you become an owner, you won't get that. So you can't use that income because it's not sustainable. That will stop the moment
makes sense.
you...
Yeah. Or it should stop.
Or it should stop, yes.
Yeah, absolutely. So there we go. I think that's like all the incomes. I mean, so we've talked. You mentioned if we move on to sort of other factors that can affect affordability that need to be taken into account. We've already mentioned sort of children and their ages and how that can affect the income. How does it affect the affordability when you're applying for mortgages? You have to declare the children, obviously. Yeah?
you do have to declare the children, whether they're financially dependent or not.
Yeah.
And again, on the income side for the family side for children, I've had a couple of clients who've got younger children and don't do as many hours at the moment, but are getting kind of the extra money coming in from certain sources. Once children start school, they can kind of increase their hours. Those kind of things help. In terms of affordability, obviously, if they're financially dependent, they will be taken into account by the lender because you're going to have to feed them, you have to clothe them, you have to look after them. So that is going to make an impact.
And childcare costs will come into it.
Absolutely.
Yeah. But if you've got older children living with you and they're out working, they're just still living with you because you can't get rid of them.
It happens.
Yeah. Then they're
no
not
longer financially dependent. Yeah. So that's going to help with affordability because the lender's not going to expect you to have to keep paying to feed them, to clothe them.
They could even go on the mortgage and boost the affordability.
They absolutely could.
If you were really tight for affordability.
Yeah.
You've seen that before, haven't you,
Yeah,
Martin?
we have. We've seen parents buying with children.
Yeah.
Just to get that family security.
Yeah.
But of owning your own home. Yeah.
It's interesting. I mean, sometimes the lender would allow for people to come on a mortgage. So if your mum and dad want to buy with daughter and a husband, it's still doable.
Yeah.
And you can use all the incomes as well. So that helps.
Interesting.
Yeah. So not every lender, but...
So there's a few lenders that will take multiple. So do they have to be relatives or can they be...
I think they do.
Could you just have
No, you can buy with
friends
there
buying
are
together?
different lenders,
friends, definitely.
Friends,
I've spoken to a couple of lenders who'll do it
could
with
all
friends.
club together?
Club in. buy a house together.
Boost your affordability, isn't it? Talking of an income, if 2 incomes aren't enough, get someone else.
Yeah.
Yeah.
So that's a good idea. What about age and maximum terms? I think we talked about this before in one of the previous podcasts, but we'll cover it off again.
I think we did, didn't we?
So minimum age is 18.
Yeah.
Maximum, well, I think
Lenders
70.
It all depends, isn't it?
Depends on the lender, isn't it? I just had a lender today who said maximum is 80. So obviously it depends whether you're paying into a pension, what's your pension pot like. Some lenders would say, well, 70 is the top. We don't really care whether you pay into a pension or not. So depends on the lender again.
But obviously the benefit of taking that longer term is that it makes the mortgage more affordable, so you can borrow a bit more initially.
Yeah.
But you need to be wary that, is it realistic that I'm going to be able to afford this mortgage when I'm 76 or 78? Or
And circumstances change, don't they? As you get older, you get income increases, children leave homes, you've got more money there, and you can just bring that term back in anyway if you needed to towards the end. So
it's important to work with a broker, not just to get the initial mortgage, but try and maintain that relationship.
Yeah. And to just meet your ultimate goal. So the ultimate goal might be, actually, I want to retire at 65.
Yeah.
My initial mortgage is going to take me to actually age 70. But over the course of the next 30 years, we're going to bring that term in. So you still can finish your mortgage at 65 and retire.
But, that's not the guaranteed route, but that's the...
It's a potential.
Can be
It's what a lot of people aim for. Yeah.
Dream. Want to retire at 50, yes.
Deposits. So we obviously did a podcast on deposits in detail, didn't we, with a couple of the other advisors, but the deposit can affect affordability, as we're talking about affordability. So we'll just recap that. So if someone's got a tiny deposit, it means
lower income multiples, for instance. If it's 5% deposit, you only be looking at 4.5 times your income.
Yeah.
If you've got bigger deposits,
So
you're obviously less risk to the lender. They're going to lend you more money, isn't it? It's
so you can sometimes go up to 5 times. So
5.5.
so deposit 5.5 times.
Even 6.
6 times, yeah.
Wow.
In some instances.
Yeah.
Crazy. Okay. Debts. How do debts affect the affordability?
Will be taken into account generally. So if it's something that will be continuing after the mortgage starts, they will generally take them into account. So monthly payments, if it's a credit card, they'll want balances. Car loans is a really good one. A lot of people have car loans.
Yeah.
If it's something like a credit card that you're paying off monthly, quite often lenders will ignore that because they know it's cleared monthly. They don't have a huge issue with it.
Paying it down monthly, but actually
paying it off,
fully
completely
clearing
the balance every month.
Going back to zero every month. So you're using it more as a current account.
Absolutely.
Rather than
a lot of people will pay for their fuel, for example, and then every month they'll pay it off. So rather than paying as they go, exactly.
1%
That's it, isn't
cashback.
it?
Yeah.
That's it. It's worth doing. Worth doing.
Make sure we pay it off, Mark.
I
every
do.
month,
I do.
Definitely. So that can make a difference. But if it's something like a loan that actually is due to finish in 2 months and your mortgage won't start for 3 months, it's not going to be in place. So they don't care. They don't need to have that factored into affordability, because you're not going to have that ongoing. If it's something like a car that's on PCP that's finishing and you know you're going to have to get a new car, then we will have to think about factoring that in, because you're going to still have a payment of some form in there. It's just about being realistic then on what you may be going to be able to afford going forward.
Okie dokes. Credit score. Does a credit score actually have an impact on affordability, or is it just you've got a good credit score and you go to a good lender, or a weak credit score and you go to a more niche lender? Does it affect the affordability, or do they lend the same? See, I don't know, because I haven't done mortgages for a couple of years.
No, I think it's just a case of, is that lender that is the most affordable, is your credit score good enough to pass the
credit score?
Yeah. There are a couple of lenders, a couple of building societies I've spoken to that have, so it vaguely affects, if your credit is good enough, they can do things like income flex, where they'll do 6 times income rather than just 4.5 or 5. But again, you have to meet their criteria, and sometimes, although it's not credit score related as such, if you've got a couple of dips, then you probably wouldn't qualify to go on that, whereas if you've not missed any payments and you've got good credit, it would potentially boost you onto that. So there's a couple of lenders where it might factor in.
That's correct, and there is one high street lender actually, and this is quite new, where when we score, the result comes with a bigger loan amount based on credit score.
Yeah.
Oh yeah.
Yeah.
Yeah, and it's quite good because it's a high street lender, and you know, if a credit score is good, you can just have a surprise. And
That's great.
So credit score is quite important for affordability.
Definitely, but also working on your credit score is important. So there is Experian Boost, for instance. So there is a lender, before you do a decision in principle, you can ask your clients to go on a Experian, and that specific lender only uses Experian. You can Experian boost your credit score, so they're going to look at your membership, like your gym, your Netflix payments, your direct debits. If they're any good, you link them, do the Experian boost, then 24 hours later
So this is
and it's an instant on your credit report.
And that can up your score up to 110 points.
Yeah.
So it's quite a big jump.
So this is for first-time buyers because they wouldn't have a mortgage.
It's for everyone.
For everyone.
For everyone.
Yeah, anyone can use Experian Boost. Just to bump up if they need to.
Yeah, but people with a mortgage and loans, they're going to have...
It still makes a difference sometimes. I have had one client who had a mortgage and tried it. It wasn't a big boost, but it boosted 20 points, which is still higher than it was before. And it's instant. You do Experian Boost and you see there and then your score change on your credit report. Yeah. So the lenders will see that after 24
like
hours.
A scam,
so
doesn't it? Who at Experian thought that up?
Yeah. But do you know what? Sometimes that specific lender has two range of products, even for the first time buyer standard range, which is slightly cheaper, and they've got a little bit more expensive range, which is for people that's got a bit of a blip. And sometimes by Experian boosting, you can actually make a difference from going from more expensive range to your standard one. So you know, worth talking to the brokers, because as I said, you know, if you don't know about it and you don't know that lender does it, then
a couple of other things that used to be brought in when I was doing mortgages: pension payments and travel costs. What does having a pension stop you getting a mortgage? How does that work? Like if you're paying into a pension,
doesn't stop you, but some lenders will take that into account in affordability as well.
Yeah.
So sometimes some of the high street lenders will ask about, as well as some of the building societies will ask what your current pension payment is.
Yeah.
Some of them will ignore it because it's technically kind of voluntary. So if it's something that's taken pre-tax, sometimes they can just ignore because it's something you can opt out of or just choose not to pay. But again, it's lender specific.
Some lenders ignore it because it's also the law these days that most people are employed people especially are in pensions, aren't they?
Absolutely, yeah.
So again, speak to the broker and they can work out which lender to go to depending on your pension payment.
Definitely.
Travel costs?
Will definitely have impact if someone's got a season ticket and pays quite a lot of money for the travel. However, again, there are high street lenders that would just ignore a travel cost again. So as long as you know where to go, that could make a difference, you know, because having a big deduction of your pay slip is obviously...
Definitely.
Cool.
And even fuel costs, you know, if you're travelling, you know, hundreds of miles a week, if you're doing a sales job, for example, you're travelling lots of distance, you've got lots of fuel on you.
Your employer's too tight to refund you your expenses.
There are jobs where you just have to travel. Sometimes that can make a difference if we can see it on a bank statement and the lender can see it on a bank statement. That 1 month that we might have to supply, that will be factored in for some lenders. Some again will totally ignore. So it's knowing who to approach, isn't it? For if that affordability is needed.
So to wrap this up, then, who's got a top tip on to pass on to first-time buyers around affordability and evidence? So, Petra, you're expert in CIS, aren't you?
Yes, give us a call if you're a CIS contractor, and not only. My first tip would be do call a broker. It's really important to get the correct advice for someone that's doing this job, is professional, knows all the lenders and can make it happen. Like we said previously, if we go to the wrong lender and you think, oh, I can do this myself, I don't need a broker, you might get turned down, and then it will make it even more difficult to happen. So give us a call. It's a free initial consultation. So it's only to the first-timer benefits.
That's excellent advice. Anyone got, there's not a lot you can add to
I don't know how we can add to that. That's exactly what we all think.
There we go then. Yeah. So thank you for that then, guys. So Petra's given you the advice. Give us a call. That's the end of our podcast, and look forward to seeing you again.
Thank you.